Are you ready to multiply your investment income? Do you want to supercharge your financial growth? In today's video, we're going to discover how to harness the power of leveraged ETFs to create substantial income opportunities. With these ETFs, your financial freedom is totally within your reach. But first, please do me a favor by subscribing to our channel and hit the like button because we need your support so we can keep bringing exciting content like this. Thank you so much. If we look at the overall history of the stock market, like the S&P 500 index, we can see that there have been small dips representing recessions and bear markets. However, the overall trend has been positive. This is why focusing on the long term with buy and hold strategy can work well for retail investors like you and me. Now, imagine if you could earn 2 times or maybe even 3 times what you would earn from S&P 500. Does that sound too good to be true? This is where leverage ETF comes into play. For those who aren't familiar, leverage involves using borrowed money to potentially increase returns on investments. It allows investors to control a larger amount of stock that they can afford with their own funds alone, leading to amplified gains. For leverage ETFs, it's the same idea. The fund uses derivatives to match daily returns that's typically 2 times or 3 times of a specific index, such as S&P 500. There are many leverage ETF out there. Today, we're going to talk about a specific one, TQQQ. TQQQ, or the ProShares Ultra Pro QQQ ETF, offers 3 times leverage on your favorite US big tech companies by tracking the NASDAQ 100 index. Just think about it. This ETF creates upside potential which is truly mind-blowing. If you're looking to capitalize on the growth of the tech sector and magnify your potential returns, leverage ETFs like TQQQ could be an intriguing option. Since its inception on February 2nd, 2010 till the time of this video, which is June 2023, TQQQ has generated a staggering 9,000% return. Yes, you heard that right. Your money could have been multiplied by 90 times if you invest in TQQQ from the beginning. An initial investment of $10,000 in this ETF would now be worth over $900,000. Now let's put it into perspective. For the same period, if you invested money into QQQ, which is the ETF without leverage, your return is 710%. If you invest instead into S&P index, your return for this period would be close to 300%. I mean, 300% or 700% are not bad at all, but the 9,000% TQQQ has is clearly in another league of its own. But before you go all in on TQQQ, there is more to consider. So please stay with me till the end because what we're going to show next is very, very important to successfully investing in TQQQ. Leverage has a dark history. Did you know that leverage played a significant role in the Great Depression of 1929? This is because at that time, margin trading was loosely regulated, and investors borrowed money from brokers to buy stocks. However, when the market started to plummet, the decline was amplified by the excessive use of margin, leading to the worldwide crisis we now know as the Great Depression. This is why leverage can be a double-edged sword. While it offers the potential for amplified gains, it also means that the loss will also be amplified by a similar magnitude. But that's not all. Let's talk about market outcomes. In the stock market, there are essentially 3 scenarios. It goes up, it goes down, or it remains sideways. When you invest in a normal ETF like the S&P 500 or QQQ, you make money when the market goes up. But with leverage, things get trickier. You can also lose money when the market remains sideways. That's 2 out of 3 scenarios when you could potentially lose money. This is a very important point for investing in leverage ETF. Let's look at an example now. Let's say you invested in TQQQ at the beginning of 2022. We all know what happened last year. The underlying NASDAQ 100 index was down by 33%, and because TQQQ was to amplify NASDAQ 100's return by 3 times, it's not surprising TQQQ experienced a massive 80% loss that year. Ouch! So if you had initially invested $10,000, it would have dwindled to a meager $2,000 by the end of 2022. As the market bounced back quite a bit in 2023, TQQQ has made a remarkable recovery, gaining a whopping 132% at the time of this video. Sounds impressive, right? But because your portfolio starts at only $2,000, even with that 132% tremendous surge, your portfolio would only be worth around $4,640, less than half of your original investment amount. Now let's compare that scenario with investing in the regular QQQ at the beginning of 2022. QQQ declined 33% in that year, so if you had initially invested $10,000, it would decline to around $6,660. Fast forward to 2023, market comeback would bring your investment in QQQ to $9,085, not too far from break-even. Now, you might be wondering, when's the best time to invest and more importantly, how to avoid the sharp declines in leverage ETF? That, my friend, is truly a trillion-dollar question. I can't tell you exactly when to go in and when to step out of leveraged ETFs like TQQQ. As we discussed in another video, timing the market usually backfires for investors. But the good thing is, I'll share 3 ideas that will drastically increase your odds of success. Number 1. The VIX level. The VIX is commonly known as the fear index. Normally, the VIX index is below 20, but its values go up when the market is experiencing selling pressure. VIX numbers shoot to the sky when there is a crisis going on, such as the Great Financial Crisis in 2008 to 2009 and the European debt crisis in 2011. So a flat or declining VIX index is a good indicator that the market is calm. When the market sentiment is calm, leveraged ETFs are not likely to experience sharp declines. Number 2. Interest rates. You see, interest rates determine the cost of borrowing money. That's precisely why you witness growth stocks rallying when interest rates are low. They can borrow more money at relatively cheap rates, fueling their expansion and rapid growth. On the flip side, the cost of owning leveraged ETFs tend to rise alongside interest rates. That is part of the reason why tech stocks were hammered in 2022. Now, with Fed looking to pause interest rate hike, there's more optimism in growth stocks in general, and it should be good for TQQQ as well. Number 3. DCA or dollar cost averaging. Since no one can predict the market, to truly benefit from TQQQ, you would need to spread your buying costs over a longer period of time. That is exactly what DCA is for. Picture this. An investor regularly purchases a fixed dollar amount of TQQQ over time, regardless of the asset price. With this strategy, your regular contribution buys more shares when TQQQ price is low and less shares when TQQQ price is high. This reduces your total cost and can act like a hedge when TQQQ price tanks. Over time, DCA allows you to reap the rewards of massive price increases in TQQQ. So here's the bottom line. By being strategic and most importantly utilizing dollar cost averaging to spread out your investment in the fund, you can reap long-term benefits. But remember, investing in a fund like this requires you to be immune to extreme volatility and almost robotic in your ability to stick to the plan. Consistently dollar cost average and resist withdrawing funds, even when your portfolio takes a severe hit. The market will turn around eventually. And there you have it, an in-depth exploration of leveraging the potential of TQQQ and other leverage ETFs to achieve impressive returns. Remember, when using leverage, it's essential to understand the risks involved and exercise caution. If you found this video valuable, don't forget to like and subscribe to our channel for more insightful content on investment strategies and wealth building techniques. Until next time, happy investing and may your returns continue to soar.